very cool. So guys, welcome. Lisa, Say, and myself, a little bit about us. So I'm Chris Burdick, Rain City, capital of Oregon. And so I lend, in Oregon, Washington, Texas, and various other places we do our 30-year loans. And my background is I've been in hard money lending for 25 years. My dad was a hard money lender, and I lent with him for many, many years, and then joined on with Rain City a couple of years ago when he retired. And love working with Rain City. And I also do investing myself. So I own some rentals, both single family and multifamily. So yeah, a little bit of everything, but I love the real estate space. And I'll let Lisa from Washington kind of give her own bio.
Absolutely. I'm Lesa Say from Washington. I've been in the real estate space as a real estate agent since 2005. I house hacked before house hacking was a thing. I bought my first house that was a house hack when I was 21 and just kind of moved up from there. I have my own rentals. I did flip before. I've been with Rain City Capital for about 4 years. I love it. And I love collaborating with Chris. Him and I love teaching these classes together and love to teach you guys what we know and how to make you guys successful. So you guys are going to enjoy this class. Thanks.
Yeah, that's awesome. So Lisa and I have been doing classes about 6 months now. And, we're excited to see our content getting utilized out there. I was telling these guys, the last class we did, we had some panelists come in and speak on best practices as far as what they're doing. It was a super awesome one. You can probably get the recording if you want to drop your name and request in our chat line there. We can get that one as well. But I actually had a client that was on the fence on doing this, and she was like, I'm not sure, and she watched that. She was so inspired. She made an offer on a property, got it the next week, and she's in the midst of her flip right now and crushing it and doing really good. And she said that was really inspiring, having those speakers and learn that information. So it's really cool for us to have this stuff translate into actual forward motion for you guys. So that's awesome.
Absolutely.
So hopefully today will be more the same on that. And feel free to ask lots of questions on this stuff too. Right. Okay, so I think I'm going to open up and Lisa's going to jump in with a good overview of just kind of what is hard money. And then we'll drill down into more details from there.
Perfect. Yeah, I definitely want to piggyback. That was an awesome class. And we're definitely going to do a panelist class again. So Chris and I love to collaborate. Once a month, we pretty much try to do a class together or separate, but we find it more fun and exciting for you guys to do it together. But so we will definitely have another class, another panelist. So if you guys, there is a poll down at the bottom. We take everything you say to heart, and we love to teach you guys and new stuff. So at the end, if you want to do a little poll and tell us what you do want to learn next, we definitely listen and would love to teach whatever you would like to learn. And we definitely will have another panelist class as well. So to get started, tonight we're going to teach you all the creative financing Rain City has to offer. As corny as it sounds, Rain City truly does have like one-stop shop. We had it all. So we're going to basically tell you every little creative ways we can help you grow your business. The first step is knowing what is hard money. What is this thing? Well, first we got to tell you is this is non-owner occupied. All right, let's just get that off the thing. This is not for you to go house hack with.
Or have your clients call us to ask for like creative financing for a primary residence they want to buy.
Yes.
Sorry, it's not for that. And that's mainly because our licensing is set up where it's just owner occupied. So we can't do owner occupied loans. So
no, investment only. All right. So we're just going to get that right off the bat. Okay. So this is an asset-based lending. So we are going to look at the deal first. Then we're going to look at you as the individual. So we're going to look at, does this deal make sense? Does this deal, is it profitable? We're going to look at, are you going to make some money off of it? Then we're going to look at, can this borrower pay us back? We're not Freddie Mae. We're not Freddie Mac. We're not going to do W-2s. We're not going to look at, do you have the job? We're going to say, does he have the assets in the bank to pay for the down payment and also your monthly payments? we're going to also say, okay, what is he going to pay for the property? He or she, sorry. What are they going to pay for the property? Then what are they going to pay to fix the property up? Then what are they going to sell it for? Or are they going to hold it? We're going to look at what is the exit strategy? Are you going to hold it or are you going to keep it? So we're looking at what is this deal? What are you going to do? We're about make sense lending. We're going to make sure that you have an exit strategy. So it's all about, does this deal make sense? It's not, oh, can you afford it? Do you have a W-2 and can you afford it financially? It's all as does the asset make sense? All right. So make sense lending. Does the deal make sense? And do we look at it? We also it's private money. So we could be a little bit more flexible. We don't have the same guidelines. We are our underwriter. So we have our own guidelines. We do have our LTVs and our ARVs, which we're going to go over and explain that. So right now I'm just kind of giving you an overview of what it is, and then we'll dive in a little bit more. So don't worry, I'm going to dive in more, but we have our own guidelines and we kind of make our guidelines. But the biggest one is non-owner occupied. We don't look at your W-2s. Make sense lending. Okay. If you did have a question, go ahead, raise your hand or type it in and Madeline will get it or interrupt, whichever one. Okay. So basically, does the deal make sense? And we look at the deal, okay? So when we break that down, I'm going to give you an example. So we talked about, does that deal make sense? So let's say we're purchasing a property for $300,000 and that renovation is $50,000 and your ARV after reno value is $500,000. All right. Let's say we're using 15% down. Okay. Look at the very, very bottom. You'll see that it's $297,500. I take that ARV and I divide that $297,500 divided by 500,000. That's the LTV is 59,000. Does that make sense? Let me just repeat that because I kind of went fast.
100%.
Yep. Let me do it one more time. So purchase price, 300,000 plus 50,000. That's a total loan to cost of 350,000 minus 15%. Okay. That's 297,500 divided by your ARV. That gives you 59%. That's an LTV loan to value of 59%. Our max loan to value is 70%. So if you came to me with this deal, I would be like, that's amazing. This is a great deal. Let's do it. Okay. Because we have a max with renovation of 70%. No renovation, which Chris will talk about, is 65%. So this would be a sweet deal. If you've noticed, there's a Rain City Capital, then there's a Magnolia. We have different programs. We have like a Rain City that's, think outside the box, cash collateral, land collateral, different unique property deals, which we'll talk about that are more outside the box type of lending. And then we have your Magnolia, experience-based only. The more you've done, the better the rate. It goes down if you see where it says rate, and feel free to take a picture or we can send this to you. It goes down as little as 8% interest only annually to 10. So if you've done one deal in the last 3 years, you're going to get 10% interest only annually, and all the way down to 8. Rain City, more creative, which we'll go over those type of loans. It starts at 12% interest only annually. That equates to 1% a month. So let's say this deal was Rain City Capital. Did you see that it was 297,500? Your payment for that would be 2,975,000 a month because it's 1% a month.
2,975.
Mm-hmm.
Yeah.
Yep, a month. So it's 1% of your balance. Oh, so you have an option of Rain City non-experience, because we do lend to non-experienced borrowers, or experience, the more you do, the better the rate on there. Okay. We also, if it's rural, it goes to Rain City. If it's in the metropolitan area, it will go Magnolia. So we have different options on there. Okay. Rain City, we can close extremely fast. Our fastest is several hours. I say that, and please don't do it to me, but I have had it. I'm sure Chris has had it.
We can do it if we need to. Don't make it the norm, please.
Yes, please don't make it a norm.
But we'll do it if we need to.
Yes. One of the things that Chris and I pride ourselves is we're not going to give you, we're not going to tell you something just to make the deal, to get the deal. We're going to tell you the truth. We're going to tell you, yes, it's going to be 15%, or no, it's 20%. Sometimes other people might do the bait and switch, and you might go somewhere else and find out that might not be true. And then you come back to us and we save the deal. That's most of the time how it happens, that we have to quickly close the deal. I actually have one that's in the system where they were told they were going to get a different terms, and it come to find out they didn't. And they came back to me and was like, Lesa, you said I was going to get a certain terms, and you're right. I was going to get that. So I'm going to go with you because you were honest, and I'm closing the deal with them. So most of the time it's anywhere between 3 or 4 days to 2 weeks. How that benefits you is we can close quickly. We can close as fast as you get title, because truly that's really what I need to close. I need an application. I need a PSA. I need a bank statement and title. That's what I need. And an application. That's really what boils down to it. And Chris and I can always write this out. At the end of the day, we will write this out. But it's pretty easy to get it done. So when you're trying to compete against another person that's trying to purchase a property, we can close, and we can close fast. That's going to be Rain City terms. But if you give us 10 days, we can give you Magnolia terms, which are better rates. Still, 10 days to close is awesome, right? Like, you're still competing against cash, and cash is king, right? We're the next best thing. That's why people use us, is if you don't have cash, you're leveraging and using us to be able to close and to compete against people that have cash. There's sometimes people think, well, I don't have bad credit. I don't need to use hard money. That's not true at all. People use hard money because they don't want to fork out $300,000 and 50,000 for reno. They would rather only put, that 15% down of their own money and get the job done, versus their whole amount of savings or their whole HELOC to close that deal. It's all about leveraging. They can do 2 deals for that same amount versus 1 deal.
So what Lesa was talking about with a fix and flip, that's the most common way a lot of investors will invest, and that's it's a big portion of the business of investors, and so that's good to put some energy into that piece.
Yes.
So I'm going to get into a couple of things that we do that you may not be aware of, and this is just a straight up bridge loan. This is like old school hard money lending, right? So bridge with no reno. You can do it one of 2 ways. There's bridge with no reno, where we're not financing the reno, but you're doing renovation. And in that instance, you could actually get that 8 to 10% range, kind of bridge loan money, and then and do it that way. You can also do bridge with no renovation at all. Let's say just buying the property, and you're going to hold it, or you're going to do a cash out refinance on that property, and you're going to use the money for something else. Maybe you just need a quick close, or maybe you need a situation where the seller is getting cold feet on investment property, but your other lending is taking a long time. We can step in and close that thing in like a week. I had one I did for a client not too long ago. It was 5 days, and we had this big commercial property, and so it was getting cold feet. They wanted out of the deal. That lender was like saying, "Oh, I need a month to close this deal," and so we were able to come in and do a bridge loan for that property. Then they refinanced with that other lender after the fact. That's a great way to kind of have a solution to needing to close fast. So And the other thing is that, renovation loan we talked about, but Barbara just wants to self-fund the renovation. Okay, let's go to so that's bridge loan with no renovation.
Right.
The other one that we have on here, and this one is kind of designed for if you have a rental property, but you're not sure what you're going to do with it. Maybe you're going to fix and flip it, you're going to renovate it in a year or two. Maybe you need to establish some rental history, establish some kind of good credit on there. They have something called a 2+1. So it's a 2-year loan with an option to extend for 12 months for a 1% of the loan fee. And the rates on this are between 8 and 10%. So it's not going to be like Fannie Mae, Freddie Mac rates, but it allows you to get into that property and have a short-term product. Obviously, our hard money terms and requirements are not as stringent as, say, a conventional mortgage. So it allows you to get into that property and establish a rental income for 2 years. I know Lesa does a ton of these up in the Washington area. Lesa, do you want to speak on any examples of this that you do?
This used to be really big when we didn't have our 30-year program, but now we have our 30-year program. So this is kind of obsolete. So when we get to our 30-year, like, why would you do a 2-year when you can like get into our 30-year with low rates? So
True.
This is pretty much only if you're not quite sure you want to sell it, but you want to keep it as a rental. But we have it, right?
Yeah, gives you a little window there.
Mm-hmm.
Okay, now the next thing, anyway, we at least talked a little bit about Rain City portfolio money, being a little more creative, having a little more flexibility. Magnolia Capital Partners, they're not as flexible. They have some guidelines and kind of a little smaller box. Rain City is a bigger box of things we'll do. Cash is collateral. This is kind of cool. This allows you to purchase a property and like you're doing your fix and flip, but instead of putting your down payment into like basically paying down putting the property as collateral, you are financing the entire purchase price and renovation and putting your money into a side account, a side bucket with us, if you will. And then when you go to sell that property or you refinance that property, which is what you're going for, then you get all your cash back that you invested with us. So the example down here, so purchase price $300,000 and renovation amount is $60,000. So you got a total cost there of $360,000. So your down payment on that, and this will be with Rain City portfolio only, so 12%, 3 points on that. Your down payment at 20% would be $72,000 on that deal. Your loan amount is the full total cost, the $360,000. We take that $72,000 and we put it into this side interest-bearing account for you. And you do your renovation and you do your thing. Then you go back to the bank and you say, hey, bank, the property is now worth $450,000. Can I get a 75%, can I do a rate and term refinance on this property? And they're like, great, we'll give you better rates, better terms. This is awesome. And then you refinance that property. We give your whole $72,000 back to you. So it's a way to get your money back quicker. And so one of the benefits of these things is there's no seasoning period, meaning when you do a fix and flip product and doing these kinds of things, usually the banks say, okay, you know what, you have to own it for 6 months before we can do another loan with you. This way, you don't have to do that. And you can immediately, fix that property up in a month, boom, 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 do your renovation, go back to the bank and say, hey, I need cash out refinance. They do their appraisal and off you go. So this way it frees up more cash for you. You can do more BRRRR strategy, and your collateralized cash is returned to you at payoff, 100%. So this is one of the few products where we say this is true 100% financing in this kind of product. So this is a creative way. Cash is collateral. If you want to explore more of that, reach out to Lesa or I. And it's just a way to try to front load your profits and returns on a BRRRR strategy. Let's see. Oh, Lesa, yeah, take it away on the manufactured home. You are the queen of manufactured homes.
Yes. And that's a big, yeah. The big thing about the cash collateral, definitely before you jump into that, have a conversation with us, because we want to make sure that you are going to be able to get out everything that you put in, and because you definitely want to have a conversation. But that's a great tool to utilize for the BRRRR product. Love that. Love that program. So the manufactured swaps, this is huge. I don't know down in Oregon if it's as big down in Oregon as it is here in Washington, but this is a great program. There's 3 ways to do manufactured swaps. There is just to purchase it, fix up the current property, that if it's, depends on the year, if it's 1976 or newer, then it can be loanable on conventional financing. So you want to make sure that that year, what year of the home is, and you fix it up and then you put it back on the market. You also want to make sure that the title is eliminated. So if that's great, it's good condition, fix it up and you flip it, you can move on your way, fast turn and burn. Okay. The second one is if, let's say it's before 1976 and it's, just junk, and you just take that one off and you put a new one on, right? Tons of dealers. I know lots of dealers I can connect you with, wholesalers. Give us a call. I connect you. Unfortunately, right now there is a backlog on them. So have a conversation with us, but we can still connect you with them. But the great thing about that is water's already there, sewer's already there, everything's already hooked up. So you can just put the new one on, right? So that's the second option. The third is you go buy the lot and then you put a new one on. Okay. 3 ways. All of these are going to be under Rain City terms. Okay, so pretty easy. I don't know if any of you guys have any questions on that. 1, 2, and 3, you need the manufacturer swap dealer. 1, you just fix it up and make it look pretty. Okay.
I'll jump on this one. So
Yep.
land loans. So we use this in a couple different ways. Let's say you got a client or you own a piece of land and you want to collateralize that land for some other property. So we would loan up to 50% of that land's value. Rain City terms is Rain City Capital. We talk about creativity. Rain City Capital. So 12 and 3, up to 50% of the value is what we loan out. So we're like partners with you on this land. Typically, most often it's used for somebody's buying the land and they want us to partner with them because they're going to develop that land. They're going to do build a new construction house on that land. So we'd help them on the front end. We say, okay, you know what? We'll partner with you. We'll split it with you. We'll cover half the land, you cover the other half, and off we go. And these are 12-month terms. So, you got to kind of be moving and hustling on your thing. It's not like a long-term hold situation. We'll do a quick close, just like Lesa said before. We're looking at, all the basics, right? Credit, your experience, money in the bank, and evaluate the property itself. So no tax returns or income verification. So yeah, those are kind of the ways. And, and other ways you can do this too is, you're buying the land and maybe you want to do some subdividing. As long as you get it done in that 12 months, then we can do development on that land and do it that way. And at which point you can go in and do a spec loan.
Chris, we actually had a question about the title eliminated on the manufactured swap. So before we jump into the 30-year, we'll answer that since we're talking about land. So manufactured homes, so they're a vehicle first, and then they get delivered to the site, and then they get tied down to the property, and then they become real property. But until they do, they're actually a vehicle. So they have to be actually called title eliminated. And that's the term, title eliminated. And if they're not, they're actually considered a vehicle and it's not real property. So what happens is there's 2 tags, like, so, a manufactured home, it's like split in half. So there's 2 tags on the back, and then the title has to be eliminated. So if you're looking at manufactured homes, if you're talking with a realtor or a wholesaler, make sure that the year is 1970 above and the title has been eliminated, or we're going to consider that a land deal. So that's an excellent question.
True.
Yeah. And I think Chris talked about if we're purchasing the land, we can definitely help on that. Normally it's like a 2-step. If we're doing spec construction, acquisition on land first, then you get to plans and permits, then we're going to help you on spec. Or what we really love, you already do the acquisition on the land, you have the funds in there, you have your skin in the game, then we help you with the spec construction with the ground up. That's better because you already have money in the deal.
Hey, I'm just going to throw in here, Madeline, can you make a note for us to add in spec construction into our things? I just like, why don't we have it in our list?
Yeah, I noticed that too.
I'm like, oh,
See,
man.
we're ever growing. We've only done this class twice, so we're people guys, too. I was thinking the exact same.
I'll try and give you guys a 30-second new construction. What we do in construction is, yes, we do new construction.
Yep.
We want builders to be a little bit experienced. So either you flip like maybe 6 or 7 homes, or you built
Yes.
3 homes. We want to see a little bit of experience in our builders. Typically, the rates are somewhere between 9 and 12%, and 2 to 3 points as far as that goes. And usually, they want to see the loan to value to the ARV no more than 65%. So whatever the ending value is when the houses are all built, our loan cannot be higher than 65% of that. And then beyond that, like loan to cost, we can go up to, we can fund up to 85%. So a lot of times builders are coming in with just like 15 to 20% total cost in from the builder side for those things. So if you guys have builders, you want to be builders, talk to me and Lesa, because we would love to help you with that as well. And for that, we can do a single home, we can do multiple homes, whatever you guys need.
Right.
In a minute.
Good call. Absolutely.
So guys, a 30-year, this is super cool. So 30-year rental loans, this is a full fixed rate 30-year amortization. You'll see some out there that are like, these 5 or 7 year ARM situations. This is a fixed rate loan, set it and forget it thing, up to 80% LTV. The big thing to think about this is a debt service coverage based loan. Basically, what I like to say for layman's terms, does it cash flow? Is the rent more than what the expenses are? So we'll ask you like, what are expenses? What is in this? And then how much is it going to rent for? And as long as we have a 1.1, ratio factor there, then we're good. We're going to look at credit, that loan to value, location, cash requirement. We just want to make sure that, you have enough cash to do the deal, so covering the down payment, the closing cost, and you have like 6 months of reserves to make your payments. Typically you're going to have renters pay for it, but just, kind of emulating Fannie Mae, Freddie Mac, they want to see that 6 months of reserves payment there. Another cool thing of this is if you or clients you have multiple properties, let's say they have 3, 4, 5, 10, 20 properties, we can actually do a portfolio loan that puts all those properties into the same 30-year loan, the same kind of concept. Oftentimes, when you blend it like that, you can get a better rate and a higher loan to value because you're blending the good ones with the not so good ones, and it makes a better deal for both you and also the lenders. So who is this good for? Well, what I'm finding at least, is that borrowers that don't qualify for a conventional mortgage. Maybe somebody has issues with their tax returns. Maybe they're being under audit, or they haven't filed tax returns, or they're unverifiable income, or they're a business owner and that's like super complicated, and like they're like, ugh, I just don't want to deal with it. We make it really easy. We don't ask for anything with tax. We don't ask for tax returns. We're not asking for W-2 statements. We don't want to see your financial statement. It's real simple. We're running like credit and background, and how much money do you have in the bank, and then does the property make sense? It's super simple. Let's go to the next slide.
Yep. So the next slide, we talk about rate, because everyone wants to know about rate, right? So we started as low as 4.25, and that's actually extremely competitive. I don't know if some of you on the call actually have investment properties right now. The going rate is around 3.8 to 3.9, and you have to give your firstborn child to get that rate. And it's around 3 to 4 points, or 2 points. Ours is about 1 to 2 points. So we're very competitive, and as Chris mentioned, appraisal, lease, make sure that the property makes sense and the rent covers the taxes and mortgage payment. So it's an amazing product, and it kind of just wraps around us being able to service you as a borrower on everything from start to finish. And it's really exciting because you can go in and have an exit strategy of a plan A and a plan B when you call us. Like when you're going and saying to Lesa or Chris, hey, I think I'm going to flip this. And maybe you want to turn it into a rental, you have us as an option and can be an option as a rental property. And we can even quote you when you're purchasing it, like, hey, if you're going to hold this, this is where it's going to be at, instead of having to go to an outside source. And we already holding the note, and we can help you with that. So it's a great way to just kind of keep it in-house and keep it going for you, especially since we already have that relationship. I think Chris mentioned we're already all the way up to 80%. Of course, the better the LTV, the better the rate, the better credit score, the better the rate. Chris and I both been quoting out 4.25 is very standard and true. The better if you go up cash out, because that's going to be a question you guys have. Can we do cash out? Yes. Yes, you can do cash out on your investment properties. That's also something you can't find in traditional is cash out refi on your investment properties. We can do that. And there's no limit on your properties. So it's an amazing product. It's about a 45-day close. I think we have some questions regarding states. We definitely can talk to you about that. If you want any quotes, just give us a call. So it's a pretty amazing product. Madeline, I don't know, Chris, if you're strolling, I think I saw some dings as I was talking. So Chris, you want to?
Those things, yeah, that's a couple of those. North Carolina, gosh, the list is always changing. I know we have like some things we can do. So guys, if you have certain states you're looking at, just call us case by case.
Yep.
And we'll look into those states, and that's kind of changing as we go along. So I think North Carolina might be yes, but I need to check in on that. So we'll find out on that one as far as North Carolina.
We have to have a mortar and brick on some of them, and we're trying really hard to expand, but our most important is customer service and getting it done. So we will definitely look into it. Right now we're Texas, Oregon, Washington, and we're expanding too. So we definitely will look out on that.
Debt service coverage. DSCR. It stands for debt service coverage. Guys, it's just a fancy word for saying cash flow. Okay. So debt service coverage, like, can the rent service the debt? And that ratio, of like the one, so 1-to-1 would be like, it's, exactly even. Like if your rent is 1,800 and your expenses are 1,800, and that's 1-to-1. What we're looking for is a little more. So you're making a couple $100 on that thing. We want that to be a little bit more in there so you can handle like, repairs and that kind of thing that come up as a landlord. So 1.1 debt service coverage ratio. Basically, we want it to cash flow a little bit. Okay, we're just boiling down to real simple terms. We want to cash flow just a little bit. The origination cost of the 30-year is 2 points. So, and by 2 points, I just mean like 2% of the loan amount. So if the loan amount is $300,000, then that'd be a $6,000 origination fee.
Right.
Let's see.
And I think the other last question too was, is there seasoning requirements on the land? Sorry, we missed that question. I apologize on David on that one. I don't know if at the very end, I think we have one more slide. At the very end, we're going to have questions. I would love if you can come back on so I can answer that question specifically since we missed your question, just because I'm not quite sure what you were asking on that one. So we'll get that question. Okay. So I'm just going to go over basically all the programs that we talked about today, because I know we talked about a lot. And I know this is just kind of an overview of everything that we have. So I know at the end we will open it up and we'll have lots of questions. And then afterwards we can talk 101. But basically bridge, that is, you buy the property, fix and flip, buy and hold. You need to fix up the property or not fix up the property, like Chris mentioned. We have our 30-year rental programs. We have the cash collateral programs. We have the 2+1, the manufactured swaps, and then the land collateral. So we have all of those that are here to help you, make money and to service you. So any questions that you have, any statement you want, Chris, on that, to jump on that?
No, you guys. I mean, like I said, we're all about the creativity, and this is just a brief span of the things we do, and then we get into like, I could get into more detail. I'd go into like we do cross collateralizing this, or like maybe we encumber this, or maybe we doing the spec loan, and we'll take this extra couple lots over here. So we're trying to make it work for you guys, trying to make it work for us, so it's a win-win for everybody. If we're going to deal together with you, and if it's a terrible deal, we'll be like, man, this is a terrible deal. We're your second set of eyes. We'll look at the deal and be like, this deal is great, but if the deal is skinny and it kind of sucks, we'll be like, hey, don't do this deal. Or change this deal in different ways so that it works better, so it works better for all of us. So you win more and we win more, and and we can do more deals together. So yeah, we're all about the make sense deal. If it doesn't make sense, we're gonna be like, let's not do that deal. And don't worry, there are a ton of deals out there, guys. So if you see a terrible deal, it's okay to let it go. There's other deals coming down from other sources, wholesalers, from things that are language from the market, people networking. There's always another deal coming. So don't hang on to a terrible deal. So
yeah, that's great advice, Chris. That's excellent advice. So why don't we open it up, and if people have questions, we'd be happy to answer any questions for you.
Yeah.
All right. Well, I think people don't have any more questions. So why don't we call it a wrap? And if you do, give Chris a call, give me a call, and we'll definitely love chatting with any of you. And so thank you so much. And we'll definitely be talking, okay?